Good day everyone, and welcome to our webinar for the final webinar for this year. The next webinar will be on the 5th of February 2025, so just make a note of that. There's no webinar in January. Okay, let us begin then in America, where we usually do begin. At the last confidential report, it was done on the 6th of November, and Trump's win in the US elections had just occurred. The Republicans, of course, also won both the House and the Senate. Now, Trump's win was not what we were expecting or predicting. Like many analysts around the world, we got it wrong. We did, however, correctly predict that after the election, once the election was over, the S&P 500 would reach a new record high. Clearly, markets are easier to predict than politics. The ramifications of Trump's win are many, and much is still unknown. We do not know exactly what he will do next year when he takes office. He is truly a wild card. But we believe that it will not be as much of a disaster as the Democrats generally fear. What is clear is that the elections presented considerable uncertainty, and investors hate uncertainty. Now that the uncertainty is behind us, the markets can move to new record highs, which is what they are doing. After the election on the 12th of November 2024, we posted a tweet in which we said that we expected a correction. The S&P 500 then fell back to 5,870. I'm just going to put a little bit less data on the screen here so that you can see this in more detail. All right, there we are. You can see there's our tweet, and then the market fell back in a bit of a correction here. And then, of course, there was this hammer formation on the 20th of November. And at that point, we tweeted the following. The hammer formation on the S&P 500 yesterday, combined with the strengthening of the rand since the 14th of November, bodes well for Wall Street today. It looks to us like the correction which we predicted on the 12th of November may be over. We should probably now look for a Christmas rally. And immediately after Thanksgiving, on Black Friday, the S&P 500 reached a new record high. There it is there. During the day, it reached 6,043, but there was some window dressing, which brought it down to 6,032. That was just after Thanksgiving, right? Window dressing is where the big institutions which are holding large parcels of blue chip shares either buy in or sell out in order to clean up their portfolio for the end of the month. So we expect this rally to continue into the new year, right? It's important to understand that this bull trend has been going on now for 15 years, since March 2009. It's been driven by three major factors. First of all, the massive quantitative easing, which followed the subprime crisis in 2008. And then this quantitative easing was, of course, extended when COVID-19 happened. World markets have literally been flooded with cash, and much of it is still sloshing around out there. The second major factor is new technologies. Smartphones, artificial intelligence, and humanoid robots particularly. These three technologies are having a major impact already on the profitability of S&P 500 companies, and we expect that impact to only grow in the future. And then the third major factor that's driving markets is cheaper renewable energy, the switch away from oil and fossil fuels, especially to solar power. So these three factors will have a huge impact on the profits of S&P 500 companies, and it's quite difficult to assess just how far up the S&P 500 could go. On the 5th of January this year, a long time ago now, more than 10 months ago, we posted a tweet in which we said that our calculations showed that the market would go to 6458. At that time, that prediction seemed a bit absurd. It seems far less absurd now that the S&P 500 is above 6,000. Some Trump moves in the US economy are already in progress. For example, he's taking the US out of the Paris Accord on climate change. This is, in our opinion, a retrogressive move. America has about 4.23% of the world's population, but uses roughly 20.3% of its oil. So it is a major polluter of our environment. Leaving the Paris Accord will result in serious global warming, in our view. The second thing is that he's launched a trade war with Canada, Mexico, China, and many other countries. Trade wars are never good for business. They push up inflation and generally reduce profits. The third thing that he's done is he's got Elon Musk involved, and Musk is going to cut apparently $2 trillion off the US budget deficit. If he can do this, it is clearly a good thing. And if anyone can do it, it must be Musk. But we will wait and watch with interest. We believe he will run into some serious and determined bureaucratic opposition. Okay, looking at the US economy, inflation continues to be benign. The CPI was 2.6% in October, and core inflation was 3.3%. Both numbers were what the market was expecting, so there was no real impact on Wall Street and the S&P 500. The Fed will reduce rates by a further 25 basis points in December, most probably. Lower rates will gradually improve the profits of S&P 500 companies, and so share prices should continue to improve. Non-farm payrolls in America increased by just 12,000 jobs in October. In other words, they were virtually flat, virtually unchanged, and the unemployment rate stayed unchanged at 4.1%. This shows that the employment situation in America is stable. Unemployment remains at very low levels, and jobs are freely available. Clearly, the Fed has achieved its goal of reducing inflation without causing a recession. The three major factors listed above, or that we have spoken about earlier, will continue to drive the economy forwards. Of course, the prospect of a war between Israel and Iran has subsided somewhat now, and that has a major impact on the oil price. And we'll just take a look at the price of North Sea Brent oil here. Put 2 years on the screen. What you can see here in the oil chart is that the price of oil has been bounded on the lower side by support at $72 a barrel, and then there's been a descending trend line on the upper side. So this is a descending triangle, and it's heading rapidly towards some sort of resolution. The other day in September, the oil price broke down to $70 a barrel, and it did that just a couple of days ago as well. So our view is that the oil price will probably fall downwards out of this descending triangle in due course. Every year sees more and more renewable energy generated, and solar technology especially is getting cheaper and more powerful. This means that the political importance of the Middle East is declining. Falling fuel prices obviously boost every economy in the world, including South Africa. So we expect the oil price will continue to be under pressure for some time. Okay, turning our attention to Ukraine and developments in that area, Trump, of course, will be brokering a peace deal between Russia and Ukraine. He does appear to be trying to get Russia to relinquish, he does not appear to be trying to get Russia to relinquish some territory. And Zelensky says the war will go on until Russia withdraws completely. So they're obviously at loggerheads here. Another major stumbling block is Russia's opposition to Ukraine joining NATO. And recently it looks like both sides may be ready to compromise. Russia may be ready to allow Ukraine to join NATO if it gets to keep what it has won so far. And Ukraine would be happy to join NATO because that gives it the security it needs against Russia. And like most good settlements, both parties will walk away not really getting what they want. It's clear to us that both Russia and Ukraine desperately need the war to end. The recent escalations that we've seen, North Korean troops being brought into the battle, the permission for Ukraine to use longer-range missiles, the intermediate ballistic missile, the Oreshnik missile fired by Russia, which is capable, of course, of carrying a nuclear warhead. Putin is clearly trying to scare NATO, but everyone knows that he will not use nuclear weapons. He will not attack a NATO country, in our opinion, even with a conventional weapon, because to do so would immediately mobilize all 50 NATO countries against him. And he does not have the resources to fight even one of them, in our view. In anticipation of the peace talks, of course, he is trying to gain more ground in the war, and he is doing so, especially around the Donetsk region, but this is coming at an immense cost. On one day, recently, Russia lost 2,000 troops killed, wounded, or captured. That is a staggering loss for a single day. They clearly cannot sustain this level of losses. And at the same time, the Russian ruble has collapsed to less than 1 cent, 1 US cent, and that's another major problem in the country. That will obviously push inflation higher, and remember that collapse in the Russian currency comes with interest rates there already at 21%. We believe that the collapse of the Russian ruble has made Putin far more vulnerable to a popular uprising, and we anticipate that something like that may well happen now. Trump, of course, has not said how he will bring the war to an end. His victory in the election was clearly a relief for Putin, but it may turn out to be a major problem. Trump is in a very strong position to negotiate a settlement, mainly because the Ukrainians have reduced the Russian army enormously. And he can support Ukraine or give them no support. So he's got a lot of power to force some kind of settlement. The real question is, what kind of settlement will it be? Allowing Ukraine to attack targets inside Russia with NATO weapons was, of course, a crucial decision. Ukraine has already used this to destroy more military capability. The situation is fluid and, in our opinion, difficult to predict. But our view is that Putin will probably not survive the peace accord, whatever it is. An important indicator, of course, is Wall Street. The market is moving steadily up and making new record highs. If World War III is really imminent, as some newspaper journalists and analysts are suggesting, then surely the smart money would be selling out big time. We don't see that. We don't see any sign of it. In fact, very much the opposite. Wars are notoriously bad for stock markets generally. Simply put, the stock market is not behaving as if World War III was imminent. And the fact that the ruble has finally broken down through support at 1 cent, 1 US cent, is, in our opinion, very significant. The currency of a country, of course, is like the shares of a company. If a country is collapsing, then its currency plummets, like Zimbabwe's did. You may recall that. All right, let's turn our attention to South Africa, particularly let's look at a few factors on the political front. Sorry, I just knocked the microphone over. The Government of National Unity is proceeding with reform work without any major problems. The economy is already responding well to these reforms and, of course, to better management. There's been a huge increase in business and consumer optimism, both locally and overseas. The falling price of petrol and the end of load shedding are helping hugely, as is the pattern of declining interest rates. Ramaphosa, of course, is still battling with the impeachment issue over Pala Pala. His lawyers say that there is no evidence of wrongdoing. Obviously, his continued presidency is very important to the government of national unity, so nobody really wants him to go. Some other factors: the basic income grant, which is 370 Rand a month for impoverished people aged between 18 and 60. This was supposed to be a once-off grant to alleviate the impact of COVID-19. The ANC has made pre-election promises to make it permanent. This is a very similar situation to the national health insurance situation. It's a populist measure which we really cannot afford. Making it permanent will make the reduction of the government deficit very difficult. Also, since I last spoke to you, the poisoning crisis at spaza shops has arisen. 20 people are dead, another 1,000 were made sick. The informal sector, of course, keeps millions of people in work who would otherwise be destitute, but it operates outside the law. The taxis, for example, squatter camps, spaza shops, these help to employ hundreds of thousands, if not millions of people, but they result in hundreds or thousands of unnecessary deaths. The squatter camps are regularly devastated by fires or floods because they are not built correctly in terms of building codes. Taxis drive very dangerously on the roads, causing accidents all over the place. And there are no health inspections of spaza shops selling food. The informal sector gives millions of people a living, but there is a huge cost to it. Then we had the news that there was a surprise improvement in the audits of the provinces and government departments. Over the past 5 years, 50% more government departments and provinces have received clean audits. This is impressive. It cannot be due to the government of national unity, and there are many departments, of course, which still have audit problems. The improvement in our view, is largely due to the Ramaphosa administration and its efforts to clean up after Jacob Zuma. As usual, of course, the Western Cape has had by far the most clean audits, with 15. Okay, let's look at our economy, the South African economy. Inflation is down to 2.8% in October. This is very good news. Sharply lower than September's 3.8%. The Monetary Policy Committee cut rates by a very conservative 25 basis points. The drop in inflation, of course, was mostly due to a 5.3% drop in the price of fuel. Food and beverages were up 3.6%, which was less than expected. Bread and cereals were actually 0.5% cheaper, and maize has been falling for 3 months now, the maize price. The Monetary Policy Committee could clearly have cut 50 basis points, but they wanted to encourage overseas investment, so they erred on the conservative side. The repo rate is now at 7.75%, and the bank is expecting growth of 2% by the year 2027. They are planning to bring inflation down to 3% in line with most of our trading partners. The producer price index was in negative territory. It actually went down by 0.7% in October, mainly due to the drop in fuel prices. Petrol is down 22.2% over the year, and diesel is down by 26.9% over the year. Consumer spending is up by 4.1% in the third quarter of this year, and fast-moving consumer goods rose by 4.5%. Frozen foods were up 7.4%, and fresh foods were up by 9.1%. Take-home pay is rising and inflation is down, and consumers are beginning to spend. Home appliance sales were up almost 10%, and online shopping is also up. Black Friday sales are now spread over several weeks, and that should be a further boost to the retail sector. General dealer sales through supermarkets, which includes mainly supermarkets, was up 4.5% in September. Business confidence is high and rising. The two-pot system for retirement funds has released 35 billion rand into the South African economy. Standard & Poor's has raised the SA outlook to positive. We're still 3 grades below investment grade, but we're moving in the right direction. The low growth rate and the high level of government debt are clearly negatives. Standard & Poor's expects growth to improve rapidly in 2025. This will help to stabilize government debt as tax collections will increase. The government's mid-term development plan shows GDP growing by 5.4% in 2029. This depends on accelerated reforms, with ministers taking on performance agreements. The economy, our economy, created almost 300,000 jobs in the third quarter of this year. Most of this was due, of course, to the end of load shedding. Unemployment fell to 32.1% from 33.5% in the second quarter. Officially, there are now 17 million people working in this country and 8 million unemployed. The country is still creating less jobs than the number of people joining the workforce every year. But the direction is right. Youth unemployment remains high at above 60%. All right, manufacturing production fell 0.8% in September, mainly because of vehicle sales, which were down 18.7%. The transition to electric vehicles throughout the world is starting to cost the South African motor industry. Mining production was increased by 4.7% in the year to September because of a 6.7% increase in platinum group metals production. In 2024, there was a shortfall of 682,000 ounces of platinum group metals. In 2025, that shortage is going to shrink slightly to 539,000 ounces. The demand for platinum, of course, is impacted by the switch to electric vehicles because obviously internal combustion engines are the ones that require auto catalysts. But there is some evidence that the demand for auto catalysts is increasing. So it's not all about EVs at this stage. There's been a sharp drop in PGM production, mainly due to a lack of investment in the platinum mining sector. The hydrogen market is also starting to impact on platinum group metals because of the production of fuel cells. They require PGMs. Manganese production in September was up 13.5% and chrome production was up 17.3%. Obviously, the end of load shedding was a major factor for the mining industry, but gold production was down. Goldfields was down 6%, Sibanye was down 9%. We're expecting a civil servant strike. The civil servants have said that they will go on strike if their demands for a 7.5% pay increase are not met. However, in my experience, such strikes do not have much impact on the economy. Most people do not really regard the civil service as something which is efficient. The strike will simply make it a little bit more difficult to get something done at Home Affairs. Schools, of course, will have to work around the absence of teachers for a while. The civil service is so efficient anyway that everyone expects delays, so I don't expect a big impact from this. South Africa is already using about 75% of its available surface water. The Ministry of Water and Sanitation has got 14 projects underway which are designed to increase our flow of fresh water. These altogether are costing about 100 billion rand, and they include the Highlands Water Project, the Lesotho Highlands Water Project. Leaks are losing about 33% of the water which comes into Gauteng. And to put that in perspective, the international norm is for leaks to cost about 15% of water. The average South African is using about 218 litres of water per day, where the international average is about 173 litres. Joburg is now looking at level 2 or even level 3 water restrictions. There is, of course, a drive to stop illegal water usage and to get rid of all the leaks. But there's a problem here because there's been a complete lack of planned maintenance by the ANC over the last 30 years. Water shortages, of course, will affect both consumers and businesses. The COP29 conference on climate change is in progress, and the amount pledged for South Africa's just transition away from coal towards renewables has jumped from 8.5 billion to 14 billion now. Much of this cash is in grants, but some of it at very low interest loans. The cash flow into the country will stimulate the economy. The main motivation is to move to renewables, and that motivation is coming really from Eskom's extraordinary price increases. The international price of coal has dropped by more than 2/3, yet Eskom is asking NERSA for a 36% increase in their prices next year. There's absolutely no justification for that in our view. Eskom is still losing about 30 billion a year to illegal connections and theft. Alright, let's turn our attention now to the Rand. Just put the chart on the screen here. Okay, there's the chart of the Rand versus the US dollar. Before the elections, the Rand was moving in a strengthening trend, mainly because of the end of load shedding and the appointment of the Government of National Unity. There was also a shift towards risk on in international markets, which always helps the Rand. That trend came to an end, of course, with Trump's victory. You can see here that we eventually reached a cycle low on the 27th of September, where the Rand was trading for 17 Rand and 11 cents to the US dollar. And then, of course, there was some concern about the US election. The election took place, and since Trump won, the Rand has fallen back to over 18 Rand to the US dollar. Now the Rand is moving sideways at that level, above 18 Rand. And the main reason is that nobody really knows what Trump is going to do. Investors must wait now. He said that his intention is to implement tariffs, but we do not know how those tariffs will impact on South Africa and the economy. So we've got a gently strengthening trend followed by a sharper strengthening trend, and then suddenly weakness as the elections came through in America. In our view, the future of the Rand is generally positive. I think it will continue to strengthen once we understand what Trump is going to do, but the general direction of the Rand is towards a stronger level. Okay, and then I want to just look at Bitcoin quickly. Let's put a bit more data on the screen here. Okay, there's the Bitcoin price. We have for some time now, well, actually since Bitcoin began, we've been saying this is not an investment, it's a speculation. If you've got it, sell it. If you don't have it, don't buy it. You can see how the Bitcoin price was declining in a very clearly defined channel until the US elections. After the elections, it jumped mainly because of Trump's affinity for Bitcoins and also Elon Musk's. Now it is battling to get through the $100,000 level and is starting to show some loss of upward momentum. We think that the smart money may be dumping this at this stage and getting out. Our advice remains the same. This is not an investment. It offers no income. It has no assets. It is simply based, the price of it is simply based on what people believe. If people change their beliefs, then this thing has got nowhere to go except downwards. So we are not optimistic about Bitcoin. All right, let's look at some companies now. The first story, of course, is the new listings. We had Assura come to the market the other day, last week. This is a UK healthcare real estate investment trust. It took a secondary listing on the JSE from the 26th of November. 3.25 million ordinary shares were listed at 950 cents each. The share has climbed to 1,000 cents, so the company now has a market cap of $32.5 billion. In our view, this will be another blue chip real estate investment trust and a rand hedge. It should appreciate steadily, especially if the rand falls against the pound. The second one, of course, that's exciting, the second listing was the Boxer listing. This was spun out of Pick n Pay and listed on the 28th of November. 202 million shares were listed and sold to select investors for between 42 and 54 rand. The initial public offer raised 8.5 billion, which is being used. The company plans to use that to open 500 new stores over the next 7 years, which is impressive. The main competitor for Boxer is Usave, which is a ShopRite company, which already has 463 stores around South Africa. Pick n Pay will keep about 60% of Boxer. The share price of Boxer has already risen to 66 rand and 23 cents, giving it a market cap of over 30 billion rand. Okay, the next share I want to talk about is Spar. Spar, of course, is a big international retailer, grocery retailer. In South Africa, it includes the Tops Liquor Outlet, Build It, and also Pharma. Overseas operations in the UK and Switzerland. In the results for the year to the 30th of September 2024, turnover was up 4% and headline earnings per share were up 11.1%. Just going to put a bit more data on the screen here. Here you can see that technically this share has been falling for some time. We advise that you put on this long-term downward trend line and wait for the upside break. That happened on the 12th of June 2024 at a share price of 110 rand and 65 cents. We added it to the winning shares list a little bit later at 122 rand. The share has now moved up to 143 rand, and we expect it to continue to perform well as the South African economy recovers. Okay, the next share I want to talk about is Argent. Argent is a manufacturing and commodity trading company. It operates in South Africa, the UK, Europe, USA, and in Canada. It has local brands like Expander and Jetmaster, which you probably know. It's involved in mining, in crane services, and in concrete mixing, so it's quite diversified. We became interested in the share when it broke above this period of sideways movement that it was involved in over here. We added it to the winning shares list on the 3rd of February at 1670. It's now moved up to 2805, 2750, somewhere around there. So it's gone up about 65% in 10 months. In the results for the 6 months to the 30th of September, it reported gearing, its leverage, just 5.6%. So debts are roughly 1/20th of its equity. This gives it plenty of headroom to make acquisitions or to expand its operations. Even now, the share is trading well below its net asset value of 32.66. Okay, the next company I want to look at is Attack. Attack, of course, is a real estate investment trust and property developer. So again, this is a share which was moving sideways for a long time. You may know Attack because they are the developers of Waterfall City, which is just east of Johannesburg. This is a big mixed-use development with both commercial and residential elements. It includes, for example, 10 retail outlets, 4 hotels, 80 restaurants, 3 private schools, 14 gyms, and it has 300 hectares of green belts and 37 kilometers of biking and walking trails. So it's a massive development on the eastern side of Johannesburg. Of course, Attack has other developments in other parts of South Africa and also in the rest of Africa. In its results for the year to the 30th of June 2024, distributable income was up 20%. Occupancy was at 92.8% and rent collections were 100%. It's also got very low gearing with a loan to value of 25.4%. In general, with real estate investment trusts, we like that LTV, that loan to value, to be below 40%. So 25.4 is very conservative. The share moved sideways until January this year, and then it broke up. We added it to the winning shares list on the 25th of January at 964. And it's now trading at around 13 Rand a share. Still trading well below its net asset value though, and in our opinion still represents value. The last share I want to look at is the Cal Group. You may remember this one. It was previously known as Carp Agri. Let's just try and get this thing into a good place. Yeah, there we go. So Carp Agri, it's obviously originally a subsidiary of PSG, and they still own it through Zeta. So Zeta is another listed company. Zeta is owned 43.7% by PSG, and Zeta itself owns 40.9% of the Cal Group. It has 7 divisions, all linked to farming and the agricultural industry, including the fuel company. And they're aiming there to be a market leader in the retailing of fuel in South Africa. The business is very dependent on the weather's impact on agriculture, so that's something to remember. The long-term trend was downward, as you can see here, and we were advising people to wait for an upside break. That upside break came at the end of last year, in November 2023, and we added it to the winning shares list over here on the 5th of December of 2023 at 3884. It's gone up quite nicely now, and it's trading above 50 Rand. It's got exposure to the agricultural markets, which makes it a bit risky, but volatile. But we think it will continue to perform well. Okay, folks, that's about what we've got for you today. I hope that you found something of use and something interesting in that presentation. The next presentation will be on the 5th of February next year. We don't do a presentation in January because there's not much news over the Christmas period. So I take this opportunity to wish you all the best for the festive season, for you and your family, and we'll talk to you again in February next year. Thank you for listening to me.